and welcome. Thanks very much for attending this webinar, where we will be discussing how companies are embracing technology to more efficiently and accurately address the challenges of consolidation, multiple currencies, general reporting, as well as financial planning and analysis. We hope you'll find the session informative and that it will give you some new ideas on how to address age-old challenges. The session is 45 minutes, so we will be touching on only a few of the models and that we have. However, there will be future webinars where we will do a deep dive into specific topics, so keep your eye out for those. Firstly, for those who may not be familiar with our organization, I'd like to introduce Solva. Solva has been active in the corporate performance management, I'll use the abbreviation CPM from here, quite a mouthful, space for over 25 years. In that time, we've grown into a global organization focused on empowering you by enabling faster and better decisions using a single cloud-based solution that automates reporting and planning processes. Our head office is based in the USA, and we have physical presence in over 50 countries across the globe, currently helping over 4,000 organizations achieve their reporting and planning goals quickly, efficiently, and very important, consistently. Further, we are a SOC compliant, gold certified Microsoft partner, and we've even authored several books on CPM and business intelligence. Then down to those of us who are going to be talking today. To introduce myself, I'm Rob Bowden, the Senior CPM and Channel Manager for Solva Africa. With me is Andrew Smith, Solva Africa's Senior Advisor, many years as a finance manager. And he will be taking over shortly to address the key areas a CPM solution needs to address to be truly effective, after which I will demonstrate how we achieve this in Solva. Finally, we'll have a short customer success story followed by Q&A. If you have questions through the presentations, please add them to the chat and we will answer them in the Q&A session at the end. The session will also be recorded in case you have any connectivity issues through the webinar, or if you want to share the webinar with anyone who may be interested. But for now, over to you, Andrew.
Thanks, Rob. Morning all. Yeah, I would just like to briefly run through some of the complexities influencing businesses currently. Following the effects of COVID over the last years with the current situation in Ukraine and Russia, there's enormous pressure to produce monthly reporting faster so that better timeless decisions can be made. This follows through also to generate reports and budgets in the same fast manner. The challenges include data lying in legacy ERP systems, different charts of accounts, currency translations, and complex ownership structures. Many organizations resort to manual processes to pull all these puzzle pieces together. The old ways of generating numbers are too slow and are prone to errors, so change is required. The question is, how do we pull all these puzzle pieces together? And I think let's just go through these 5 points. Rob, yeah. Let's just consider these points one by one. If we look at multiple reporting entities, economic growth is becoming increasingly difficult in many companies have turned to growth through acquisition. With this type of growth, a solid consolidation process is required, so you can monitor and guide the entity to ensure that the successful integration into the entity. Another problem is multiple charts of accounts. Many with acquisitions, companies adopt a decentralized model, allowing each entity to manage themselves. This results in many different ERP systems and many different structured charts of accounts and various internal reporting requirements. More on the consolidation, we have automated intercompany eliminations. With all the new companies coming in, keeping your financials across all of those entities, you need to make adjustments to eliminate the intercompany consolidations. You need to have comments and audit trails help place with those adjustments and keep context to give better understanding of those adjustments. And as a tech leader, you understand the value of automation. You have to have the right to demand that your financial consolidation and reporting software perform this crucial time-saving task for you. Obviously, when you're adding new entities, or companies, or branches, or divisions, whatever you want to call them, you're going to be expanding, and obviously some of these would be outside of the Republic of South Africa, and you'll be dealing with enterprises in various currencies. It can be rands, dollars, pounds, euros, or whatever it might be. And you want to ensure that you can get a clear understanding of the profitability differences between these various international subsidiaries. You can only do this if you're comparing apples with apples, and you've got a clear currency conversion, and you're able to run various reports in whatever currency you need. And then right at the end, you've obviously got integrated financial planning and analysis processes. Accurate forecasting and budgeting are a necessary company requirement to give the company some direction and then enable correct decision making. It's better to make timeous decisions based on accurate data rather than waiting and then making decisions on outdated data. So I think these 5 points are critical. Rob, I think if you can just go through this now and just show us some practical examples and some slides on how these 5 things are related and connect all the puzzle pieces.
For sure. Thanks, Andrew. Yeah, so sort of going through it in the same sort of order that Andrew has and looking how you would actually address those specific issues in Solver. I'm going to kick off here with a consolidation income statement for my organization. So before we start looking through the actual report, just a little bit of discussion about what has actually happened to get to this point, because I think quite a lot of you may be receiving reports like this or even preparing reports like this in your organization, and it can be quite a lot of work to get to this point. So I just wanted to point out that all the processes leading up to the running of this report, if I were clicking run now to run it, are fully automated. There are integrations from Solver back into your financial system or systems. There is synchronization of the charts of accounts. The multiple currencies are dealt with within the Solver application, and the multiple company, intercompany eliminations are also all resolved within Solver, so that at the end of the month, once you've closed your ERP system, or even at various times through the month, you can actually open Solver, click on Run, and get the latest data right up to date. So no manual process is required to get to this point. So just having a little look at this report, starting at the top, we have some graphs and charts. We know that there are people in organizations that like the visual representation of their data, so some nice graphs for that to be able to cast a quick eye over. And then there are obviously those who will want to go into the detailed numbers below that. For example, the section on revenue. So if we're looking at revenues, Andrew mentioned about when you have multiple organizations, you can get multiple charts of accounts. So what Solver does in the background is it will map all of your different revenue lines to a standardized, almost like a standardized chart of accounts or a standardized categorization, so that when you run reports across your organization, whether you're looking at the consolidation or you're looking at individual entities or divisions or sections within your organization, you can compare apples with apples. You can run the same report for those different slices of your organization and see exactly what is going on. The other thing is that when you're running these reports, this is including your eliminations because those are automated in the background. Also, if there are any changes to your chart of accounts through the month or additional accounts that are coming in some of your entities, those are automatically synchronized with Solver so that you don't have to make changes to the design of your reporting models. The system will take that into account and filter according to your revenue category, cost of sales category, etc. Another aspect to look at is if we look right at the bottom of the screen, you'll see this report has multiple tabs. In the design of it, it's actually a single sheet model. However, when we run it, we are running it according to the organization's structure. We call that a tree in Solver. So you have a consolidated level. Then in this particular organization, we've got an Asian region, a Western hemisphere, and then below that, the particular entities that make up those particular sections. So at the moment, we're looking at a full consolidation for the whole organization, and we can click over and look at the Asian region. So the Asian region would include the relevant eliminations for that region and the sum of results across those regions. And going another step down to our corporate EMEA would be just looking at that particular company in the organization. Going back to the console, another thing that you may want to do at this point is you want to check the numbers behind the sums here. So you've got product revenue. I can right click that and actually drill down to the detail behind the number. So the system will actually drill down right to the transactional level, if that's what I want, and show me all the different transactions in the different entities. It would show me my eliminations, etc., that make up that number. I can also do things like where I'm analyzing the report, seeing how my salaries and benefits are 69,000 better than last year. Where's it coming from? I've got another level of detail hiding behind there. I can see it's coming from full-time salaries. And again, I could actually drill down and look at the detail behind that. In addition to that, I won't go into that function right now, but you can also make comments on the reports so that you have comments saved against your particular periods. So you don't have to sort of make comments outside the system.
Rob, it might be worth just jumping in. You know, on a consolidated tree, as you acquire new companies or new entities, you just add it to that tree and they will just automatically create a new tab, and it will calculate and do the currency translations in that tab as well. So, you know, it's an immediate answer to your question of how's the consolidation working, and the consolidation entries would also reflect in that template as well.
Very good point. Yes. So you can add them the next time you run the report. That additional new entity is going to be in your organizational tree and pop in an extra tab in your report with its relevant currencies. Moving on from this, going sort of one step behind the report, I just wanted to have a look at an example of a chart of accounts that you may have in an organization. So this is just an example of that organization that we're looking at, our demo company. So we would be pulling this data, synchronizing it with your financial system or systems. And we pull in things like the code, we've got the description, we've got account type that should be in the systems, account categories. And then when it gets to roll-ups behind there, you can see we've got a whole list here that are current assets. If you have that in your financial system, we pull that, we synchronize that into Solver, and then any new ones in that range will automatically come through as current assets next time you run a balance sheet. Solver also allows you to add your own special roll-ups or aggregations to your chart of accounts. I've done a sort of test Rob roll-up down the side here, and you can see that there's various things that we can actually set up and roll up in different ways. So if you have that data in the system, we'll automatically synchronize and move through to the reports. If you don't have that additional data in your systems, very easy to update it. And then as soon as any report is run based on those, it will update according to those attributes and roll-ups.
Yeah, Rob, a thing that always amuses me is that with a roll-up, it speeds the process up so much quicker. It, when it's running the report, it goes and looks for one item called current assets, as opposed to sifting through a whole general ledger looking for what it needs to look for. So, when you're mapping and using roll-ups, it speeds up the whole report running process.
Very true. And I mean, especially if you're dealing with multiple charts of accounts, here we have our current assets all in a certain range of that 1,000 or 10,000, but you could have things all over the place and look for those, whereas use the roll up and it takes that pain out of it for you. Another step that financial managers may be doing in their monthly processes. I showed you how you can run the consolidation report, but what you may want to do in the back before you do that, or even to check afterwards, is an intercompany matching report. Again, it's a case of picking your period, clicking run, and the system will show you where you have your intercompany transactions with their amounts, and you have your corresponding transactions in the corresponding entity with a corresponding amount, and you can then identify the specific areas that are not in balance. As this is a lovely demo model, everything is in balance. I think, Andrew, it's probably not a common occurrence to have all of those perfectly in balance.
Yeah, Rob, in the perfect world, this is how it looks. But I think anyone who's done head office accounting will understand that you'll have many differences. And then to try and resolve those differences, you're jumping in and out of different ledgers, running debtors, you're running the creditors, the loans receivable, the loans payable, and then ticking and bashing to find the differences.
Yes.
In this actual report, you can see the difference and you can drill down on that number, and should save you a lot of time and effort and frustration in balancing intercompany numbers. So as a balancing report, this thing is really brilliant, I think.
No, agreed. And I think that ability to drill down and really dig out what is happening behind those numbers, rather than having to go into other systems and other ledgers, etc., should be quite a big time saver.
Absolutely.
So at this point, we've had a look at our console reporting, we've looked at the chart of accounts, we've looked at an example of intercompany matching. As I mentioned before, with this sort of high level that we're looking at today, we're sort of skimming the surface a little bit. So what I'm going to move on to now is the currency check. Again, it's one of the items that Andrew spoke to, where you can run reports in Solver for your various entities. You can see this particular report again has multiple tabs so that we can look at all our different entities from one model. And we're looking at basically a trial balance in functional or base currency, and then also showing how Solver can deal with different currency or reporting currency rules. For example, we have a column with GAAP currency conversion rules. We have this column is actually according to IFRS rules. So if you have a head office based in the USA, some of those organizations use GAAP. We're using more IFRS in this side of the world, but you can actually see where those differences come in. So for quite a few of these, not much difference. As I scroll down, I can actually start identifying the difference that it is making to my books with the GAAP conversions, IFRS conversions, see the differences. Again, if I want to drill down on any of these numbers, I can. But just a nice way to be able to check your different currencies and converted currencies and see the effect of those different rules.
Rob, a trial balance maybe not the perfect example, but a very good example would be like an income statement, where your operation would be based in, say, Mozambique, and you'd want to run it in Mozambican currencies, where the head office is not interested in the local currency, but only interested in dollars, maybe for head office, or rands, or whatever the case may be. So you can run that exact same report and get the outcome in Mozambique and
Metakai.
Met a guy, that's the one.
Yes.
And then rands or dollars or whatever the head office wants to see. And you're looking at the same structure of the report, and you just pick a currency. So it's automatically calculated in the background.
True. So, I mean, as an example, in this particular organization, we have Canadian dollars, euros, Hong Kong dollars, US dollars. So you can actually, in the trial balance or in your reports, you would be able to look at it, as you say, the local company, they want to see what their company is doing in local currency. Head office wants to see it in the US dollars, for example, and you can keep everyone happy out of one system. Okay, so that's touching on the reporting side. What I now wanted to move on to was the forecasting. So we're first going to look at a forecast model, how we could do a nice top-down forecasting model. And then we'll actually look at just one way of doing some budgeting. So switching over to a forecast model. Now, all of these models that I'm showing you are actually available in the Solver marketplace, which means when you implement Solver, you will have access to all of these standard reports and models. If you wish to do bespoke models, as in ones that look like the ones that you currently look at, ones that you have a different structure in your organization, that is also part of a Solver feature where you can edit these reports and models, or you can create brand new ones from scratch and even use your existing Excel models as bases for new models. So looking at this particular one, we are doing a profit and loss forecast, thinking of the current situation. For example, if this was 2 years ago, we'd be sitting here as an organization, lockdown will have just started, and we have to say, what is this company going to look like for the rest of the year, to the best of our knowledge? And we don't want to have to do a 3-month budgeting process to do that. So we go into a forecast model like this, maybe even Ukraine situation right now. We go into a forecast model, and what this allows us is, this particular one allows us to do pluses and minuses versus our current budget based on different departments: admin, finance, sales and marketing, salaries, other costs, or looking at other types of revenue, in and out, money in and out, revenue, cost of sales, other expenses, overheads. So we can go in here and say, you know what, we think that general admin costs are probably not going to change. So we're going to leave that on a 0. We think sales and marketing, we may actually want to put some more money into sales and marketing. So let's make that a 10% increase on our current budget and pull that forward for the rest of the year. We think salaries may not change. Other costs will, actually we think cost of sales might change because we're expecting a change in exchange rate, and a certain part of our costs are exchange rate based. So we're going to say, well, let's pop a 15% increase in our cost of sales and pull that forward for the rest of the year. But in terms of overheads, maybe because we're all in COVID, we're moving out of the office, we might see a bit of a reduction in our overheads in terms of costs for office space and that type of thing. So we're going to put a minus 10% in there and pull that forward. Hopefully our electricity and water costs and coffee in the office should go down. So putting all these numbers in, while I've been doing that, all of this down here is recalculating according to those percentages up and down that I put in. So we've got our forecast. What I can also look at, just a little click on the plus there, the system has automatically brought in my actuals year to date. So this form's completely flexible, that each month I'll get another month of actual and one less month of forecast. And I can even go into very specific detailed lines. For example, down here, I can say, well, we actually need to drive people to sell more, to sell better. So we want to put an increase of 20% into commission. So aside from all the other effects, we're going to say for that particular line in the organization, we're going to push that commission up. If I scroll down, we can look at all the different lines that we can actually tweak in this model. And we get down to an EBITDA line, which is calculated on the fly for us, and all the way down to a net income line. So we can see that our net income percentage, it's not a great percentage compared to our year to date, but we can get a good picture. We're getting some graphs there on how we're seeing the rest of the year pan out. And once we're happy with this, I literally click save. And this entire forecast model down to individual line items by department, by GL account, by period, automatically gets saved into the Solver data warehouse. And we can switch straight into a model where we start comparing ourselves to that forecast. So let's say hypothetically now we've done this at the end of June. We now want to go a couple of months forward. Hypothetically, we've moved a couple of months forward, and we wanted to monitor how is the company actually performing according to this new forecast. So that's as simple as running this model of profit and loss forecast report. I've got this for October. So there's our actuals, there's our forecast. So we can think, actually, we reduced our sales forecast, but we've actually exceeded that reforecast that we did. So we have a positive variance there. We actually are coming in above budget. So even that's looking good. And then our full year predictions, what is our full year going to look like? What is our forecast, meaning actual year to date, and forecast for the rest of the year, and a variance. So, okay, our forecast is looking a little bit lower than budget, but things are not looking too bad. And then if we want to go into all the detail, we have a lot of detail below here that we can actually dig into. And again, every single number in these reports has drill downs available if we want to look at the detail of where those numbers are coming from. So what we've done there is, in a couple of minutes, we've done a top-down type of forecast, tweaking percentages up and down on revenues and costs, individual cost line, groups of costs, and given ourselves a more reasonable forecast that we could actually redo every couple of days if we wanted to, let alone every month. And at least it'll give us a picture of where we think the company is going with any major changes, which we seem to have to expect every couple of months these days with the current global economy.
Rob, traditionally budgets are built up from the bottom, and it involves the whole company, and they produce a set of numbers, and the MD and the FD know exactly what numbers they're expecting before you go through that whole process. So this tool is extremely powerful, and it lets like one person tweak and play with the numbers so that he knows what is expected if they go through that whole painful budget process. So for me, and one person can do this, and it can take half an hour or an hour, however long he wants to spend doing this, and really have a meaningful projection going forward a couple of months, a couple of years, or however long he wants to forecast where the company is going. So
I suppose it would take as long as the strategy session takes to determine those percentages, but at least it's removing all the preparation of all that data beforehand and the consolidation of that data afterwards.
Yes, absolutely.
So that's looking at a forecast. I'm going to touch on budgeting. We don't have enough time in this webinar to have a really careful look at an entire budgeting process. So what I'm going to look at is, first of all, talking about workflow. So a normal, as Andrew mentioned, your normal budget process would be a sort of bottom-up type of process. So with Solver, you set up a workflow for your budgeting. There's no pre-work required in terms of getting numbers into spreadsheets and splitting that into departments and divisions and entities. All of that is pre-populated in budget models in Solver. Those budget models are sent out through a workflow which I'm just going to use this annual departmental budget workflow as an example. So I'm now the budget manager. I can click on the status and see exactly how far people have got with their budget. So I can see there's various CapEx, other expenses, sales budget. There are various models that have not even been started by people I've sent them out to. They're still in new status. Some have moved to in progress, which tells me that those people, which is me on this one, have actually opened those forms and have started working on them. Once they've completed that, they would then save those and move them through, in this particular example, to completed status. But Solver also allows you to add an optional review and approval stage in your budget. So once you've gone through with this, you have you know that people have applied their minds, they've done their budget, everything's saved back into the system, and they can run their budget output reports. One of the aspects that they may look at, I'm just going to show a simple expenses budget as an example. So, people go in here, they'd be applying their mind to what their budget is for each month of the year for certain expense lines. But for example, something like a marketing cost. Often what happens there is people are in an offline spreadsheet somewhere putting together their budget. So advertising agency retainers or marketing costs or whatever costs they have, put the number together and pop that in the budget. But that link between that external spreadsheet and the budget is then broken. So instead of breaking that link, Solver allows you to, for a number like this, I can pop up a model from the bottom of the screen, and I can actually see that budget right now is made up of advertising, agency retainer, brochures, and then here I'm going to say, well, I'm going to add a golf day because we usually do a golf day, but coming out of COVID, we really want to do one in our next year's budget. So that's going to be another 100,000. And I can add as many lines as I want to this, but my detail is always stored back in the system, not in some offline spreadsheet. And once I'm happy with that budget, I can pop that down and actually see, well, I've added 1 million rather than 100,000. So let's just pop back there and correct it quickly. And you can see how there's this jump in my budget in April. I save this and the numbers are straight back in the system, exactly in the way they need to be for me to run any budget output reports, as in I would do a cash flow model. This is a budgeted cash flow. It runs straight off those numbers that people have put in for their sales, their costs, their CapEx, etc. Modeling things like accounts receivable, accounts payable. As soon as people have saved their numbers, I can run my budget output reports. There's no manual consolidation of the budget. And as usual, I could even drill down to see who has put those numbers in, where they're coming from, so that I can check exactly where my budget comes from. But it's simply a case of hitting run, and I've got my income statement, balance sheet, cash flow, budget for my organization. So, other thing I wanted to sorry, Andrew, do you have a comment?
Yeah, Rob, so sorry, I think a lot of people get very focused on income statement and profits and losses. And I think the actual cash in the bank gets overlooked quite a lot of the time. And to do a cash forecast to make sure you've got enough money to do what you need to do and to have the growth you need, cash flow is really important.
Yes, true. What I'm also going to do here is switching out of my full screen mode. You can see a little bit more about what the Solver menus look like, my home screen. So logging into Solver, it actually highlights quite a few of the other things that are part of the system. We have a learn how, so that is various things around data integration. We have a support portal where it's an entire online portal where you can look up any challenges, error messages, that type of thing, and assistance. We even have an online academy which allows for certification and a lot of online training for people who really want to learn everything from the data warehouse through to report models, through to all the other functionality in Solver. In addition to this, I mentioned we have a marketplace with pre-built reports. There are now over 200 pre-built reports in the marketplace that when you're subscribing to Solver, you have access to that, and you can actually pull that into your Solver. You may have to tweak it for your chart of accounts, and then you have a whole lot of other reports that our experts have actually developed that could be of use for you working in your organization. In addition to this, also mentioning security. So as soon as you're dealing with this sort of data, it's quite important to maintain your security, make sure that everything is secure. So Solver has many levels of security, from login to we can link to Azure Active Directory. We have multiple factor authentication for login. We also have full security certifications. Users in the system are set up with access to specific data, access to specific functions. I've got a whole list of functions there because I'm an administrator and a super user in this particular system. But all of that can be very well controlled to make sure that people can only do what they are supposed to be doing. So to finish off, I would just like to share a video of one of our customers. It's a customer interview that was done quite recently for one of our customers. So I'd like to share that with you, and then we will have a little bit of time for Q&A.
Hi, my name is Ryan Gray, and I'm the Chief Financial Officer of Ascent Funding. Most of my experience spans from the capital markets and raising debt capital to finance that, and I've been a part of raising capital on over $15 billion worth of assets. The current area where we're spending most of the time using Solver is on timely financial reporting to all of the operating companies and the underlying business lines, and being able to close the books efficiently and then spend time getting the financial results in the hands of the vice presidents so that they can see the results timely is very important. Along with that, to be able to compare very efficiently the forecast level on how they're doing to budget, not only on a one-year view, but also on a multi-year view as we look to grow and build a 3-year and 5-year plan. Just one example is I want to see what the cash balances are for the total organization on a daily basis, or have that ability. Now I just have an email with a link that shows to me the sources and uses of cash through the total organization at the subsidiary level. And I don't have to ask for that information anymore. It automatically is delivered to me. So when I need to take a quick glance, I'll choose when I open that link and see what I need to look at. And if there's a question, I can immediately react to that. Mostly in a lot of our financing structures where we were either borrowing money from investment banks or selling some of the consumer loans that we were originating to investment banks or other institutional investors. So there was 3 to 4 months where we had approximately 4 financing structures that provided about $500 million of liquidity that just needed to go under the microscope. Everything was amended and executed, so we did not lose any liquidity. It just took a significant amount of time in order to walk through the overall impacts of how the pandemic was impacting consumer loans. The other impacts were just the uncertainty of the overall consumer market on how consumer assets would be performing. So therefore, there was an increase in pricing to the consumers, and that had an impact on the overall loan volume that we were able to originate. Coming out of the pandemic, we had reset all of our forecasts, and we actually exceeded all of them based upon the initial assessment of what we thought we would be able to accomplish with the modified version of originations throughout the year. The next thing that we've been focused on that enables the next level of decision making and reporting is connecting it to the Power BI dashboards. And that was one of the things when I was at the Ascend conference a couple of years ago. That's the only sessions I sat in on, was the Solver Power BI reporting platform and dashboard ability. So I brought that back, and we've been implementing that maybe a little bit more on a slower basis. But that is what's going to enable a lot more reporting at the executive level, as we prefer more of the dashboard approach. So for instance, a few things that enable us to do stuff is we're able to extract a lot of information from our warehouse, our data warehouse, on a daily basis of performance of our assets, load that into Solver, and then we're able to push that through to certain Power BI dashboards that automatically get delivered depending on the frequency of need to a number of the executives. And a few of those were something that we had already in place before the pandemic, or right at the beginning. And then there was a number that I implemented during the pandemic so that we could monitor certain trigger events needed for either cash requirements or for performance requirements within our overall portfolio. And that's using the ERP, CPM, and the dashboarding network of all of these things with Solver connecting on both sides. It really enabled us to get information into the executives' hands in a timely manner.
Okay, so thank you very much for joining. We'll now look if there are any questions in the chat. If you have any questions, please pop them in there now. We've got like 2 minutes left. But if you have further questions that come out after the session, we will be sending out the link to the webinar recording. And then obviously you're very welcome to answer that with any other questions you have, so that we can deal with it some more. So yeah, I don't see any questions at this stage, so I can say thanks very much for attending. And yeah, as I said earlier, we will be sharing the recording, but thanks so much for your attention and attending, and we will be having future sessions that delve into a bit more detail on the reporting side and budgeting and forecasting side, so look out for that. We will let you know when the next ones are. Thank you very much.